Hey, howdy everyone, Tony here. I hope you're doing well. Today we'll be utilizing the TDU method of analysis to look for potential setups in the charts. Let's see what we can find. First, if you want to learn more about the TDU method, check out the site. If this video is helpful or you learned something new, please like and subscribe to stay updated with my analysis. Now let's dive into it. We got Bitcoin here. Let's take a look. So right now, these are my two accounts that I'm keeping an eye on. I think every Elliottician should probably have this on here just because of how quickly and swiftly this move was. Pretty standard for a wave 3 of a 3 here. Of course, it's not definite that's what this is, and we still have to get some PA printed down here, but for right now, that's what fits the best at this point. Looking at the larger scale here, we have a 1, 2, and I think we're still in the 3 of the 3. Finishing here, this was off the major 1, 2 here, the larger degree. We have the 618 right here, which is a most likely target for a wave 3. So typically we're looking for that. It doesn't have to reach that. We're pretty much in the paint here. We're right next to it, so that could be it. But we still don't have a offset here to match this wave 2. So we're still looking for a wave 4 here at this degree. Let us know that we're dealing with this larger degree here, wave 4, and that we're finishing up this wave 3 down. When we dig deeper down, we'll look at it, the structure a little bit more. But if we don't hit certain pivots, there's still other possible counts that are in the works at the moment. It's Sunday. We got futures open. We got open on Monday. A lot can happen. But for right now, I think we're looking pretty good for this being the bottom here, which we considered as it was happening. And then we're bouncing up potentially to get back into this area up here at 88.5 or 91. So this area right here is a big deal because in the past, we've had this area play as support and then had it play as resistance as well. So these are two big areas that could play again as support and resistance, and that's why we're watching this. We blasted through. We had a little hesitation there, but when we come back and approach a level of interest or an LOI, we really want to see how we do it and where we are on the count as well. A lot of Elliotticians, I'm sure, have this count and have this set up, but they're just probably going off of the fibs and all that stuff. I always like to look left for added confluence within levels or fibs or something else to the left that coincide. We're always looking for as much confluence as possible. The more confluence we can find, the more traders are actually going to be looking at that area and more of a potential for a bounce at least. Right now, again, it's all about this bounce. How is this going to play out? I do have a backup plan. I'm still going back and forth on if I think this is an impulse or a three-wave move, a zigzag, if you will. So depending on how this all plays out over here is which count I'm going to lean on. Looking at just what we have printed, I think we have not an idealized double zigzag here, but we have a double zigzag. We have the swings for it. So still keeping this on there. It's my backup plan just in case. Luckily, TradingView doesn't charge for extra labels and stuff on here, so I can have this as a backup and not worry about just being tunnel vision on my one count that I'm looking at. I can have both counts here or multiple counts to keep an eye on. And if one becomes invalidated, I always have my backup ready to go. So for right now, again, this level, how we approach this level, if we get that far, is going to be the key here. If we come back up all correctively, going to be looking for a rejection here. Going to keep this one nice and sweet. So that's all I got at this time frame. Let's dig down a little bit deeper now. So one thing I want to look at real quick and go over is my favorite trade setup. And this is over on X right now. You can come check it out. It's underneath the pinned comment. Or if you want to steal it properly, it's on TradingView and you can just make it your own copy there. But this is basically what I'm harping on every time. If I'm not sure what's going on, if I at least get a motive move up or ideally an impulsive move up, I'm basically looking for this setup every single time. It doesn't matter which degree, doesn't matter which asset. This is what I'm always looking for. This is the pattern I've been training on, keeping my eye out for the last couple of years. And this is a very powerful move. It fits a lot of other technical analysis besides just Elliott Wave. But basically what we're looking for is an impulsive move down coming from the left here. This coming down is the wave 5 of 5 potentially. And then we come up and we break the wave 4, orthodox end of the wave 4 here with a break of structure, ideally with an impulsive move, but a motive move is allowable as well. So after we get that motive move up that breaks the orthodox end of the wave 4, I'm looking for that internal correction into an area of interest. So I'm looking for as much confluence as I can in this area and looking for a potential long. If I do get a reaction there, then I have a second entry here that I can use and hide my stop underneath this level or this pivot here, or all the way down here, depending on the degree that I'm playing. So again, this is what I'm looking for 100% of the time, and it just so happened that it showed up beautifully in Bitcoin here on Thursday, I think it was. No matter when we get that final impulsive or motive move down here, we're always looking for this orthodox end of the wave 4 to break. And that's what we were watching for here. As you can see, we got the move up in a wave 4, motive move down, and then we immediately got the impulsive move up that broke the structure at the wave 4, and we got an internal correction here to the golden zone exactly for a nice move up. Now we've finally reached the target here. It had some issues to pop up above this level here at 85.4, which we've just busted up above and flipped over at this on the right edge here every time. We're looking for a motive move complete. We can go as small as we need to. If we're waiting for a little bit more of a conservative reaction, we can always wait until a higher degree wave 4, but this is the bread and butter right here. All right, I just want to zoom out just to go over again what I'm looking for at the larger degree and look at my box of Confluence here. It's a pretty large box for now, but we're going to narrow it down a little bit. Basically, what I'm looking for at this point is a 1, 2, 3, and I'm speculating that we have a wave 4 coming in right now. In our box of Confluence, we have a level of interest. That's the level I was telling you about right here between 92 and 88. We're looking for this to play as potential resistance. We got a breakdown. Every time we get a breakdown and we get a correction or the motive move looks complete and we're coming back in a corrective fashion back to that level of interest, I always anticipate a possibility of it being correction and it being rejected. Of course, that doesn't have to play out like that. We could just blast through, but if we blast through, I'm looking for an impulsive move up and then the correction back to this level or area of interest before we get some continuation. So level of interest can be used in either direction. So that's why I like to play them a lot, and that's why they're a big part of my Confluence toolbox. So we got a nice level of interest here, wave 4 fibs. So I think this is wave 2. So we're at the 236 right now. A typical retracement for the wave 4 is going to be 382 in here, and then the 50 here, and then potentially within the wave 4 of the lesser degree, which I have counted as here from my last chart I showed. So we have a lot of Confluence in this area. I think the level of interest and the most likely target for a wave 4, which is 382, helps us squeeze this box down a little bit more. It doesn't have to reach. We're already kind of reaching in a little bit. I want to see a little bit more. I'm going to be greedy here and look for 88.8K before I start adding and considering entering. And then in either case, I'll be looking for a rejection within this area and then try and play that rejection if I'm away from the keyboard or if something else comes up. We have wave 2 of the 5 of fibs. I think it's a little less likely that we're still rolling in a wave 5, but we have to keep that on the table yet until we actually finish and break this orthodox end of the wave 4 as I have it. There is a possibility that we could still be continuing on with the impulsive move, and this is just an internal retracement to this range here before we get continuation out and continue the trend to the downside. Again, I think it still looks okay for now as a 1-2. I think the degree is matching at this point. We need a little bit more time in here to see exactly what's going on. It shouldn't take too long. We really want to see everything play out at a similar degree here. So the bigger this gets, the less likely that it's going to be a wave 2 of this wave 5, and then we're going to continue on. Possibility. I'm looking for offset for this wave 2 up here. Now there's a couple ways you can count this. Right now I have this as a truncation. So 1, 2, 3, 4, 5 here. And that we have a nice zigzag up as the corrective move. I've seen it and I've considered it this way as well. So there is both ways. I have this base channel on and I have both levels marked out. So I'm going to be watching for base channel as well to play as resistance in this area. Again, depending on where the two starts is where we put the base channel anchor. Since I'm a little unsure, and again, TradingView doesn't charge me for extra lines, I have both on here just to keep an eye on to see if we get a reaction off of it. And that's usually the key I'm looking for. I don't typically put naked orders, just hoping for a turn in here. Typically, if I'm at the computer, I like to see a reaction out, and then I have a spot, a little hidey hole for my stop if I do make an entry. I have a much tighter stop here instead of stopping it at this proposed up here. So if we blast through, then I'm not in the trade. Of course, there's always a chance I can miss it, but I don't put naked orders here typically when I'm trading. But I think since the week This next week's going to be a short week for the US. We have Thanksgiving coming up, so it's going to be a short week. A lot of people are going to be on vacation. I think that's a decent kind of narrative for us to go sideways for the week. So that's what I'm anticipating. And I'm using this. So right now I'm using this as a zigzag. So in Elliott Wave, we have a guideline called alternation. So depending on what correction we have here in the wave 2, we're going to be looking for the opposite style of correction here in the wave 4. Having this both ways as a potential sharp move and a potential flat style correction here is a bit of a disadvantage. Typically when we have a flat correction here in the wave 2, we're looking for a sharp correction or a triangle here in the wave 4. That could be a possibility here if we do end up slicing through here and going a little bit deeper than usual. We're looking for a sharp correction, not a deep correction. Just because this was a sideways correction doesn't mean we're looking for a deep correction. We're looking for the style of correction. So the style of a flat correction here is sideways, and the style of a zigzag is going to be a sharp correction. So if we have a flat correction here, we're looking for a sharp correction or a triangle in the 4th wave. If we have a sharp correction here in the 2 wave, we're looking for a sideways or triangle pattern in the wave 4. So I'm watching for this. If this is a wave 4, we get some kind of triangle, since those are easy to set up a trade plan with. But right now I'm thinking this is the primary actionary wave of some kind of correction at the wave 4 at this larger degree. So I don't think this would be the end of the correction. I think this might be only the first subwave. We're going to come up here, reject, and then we might do some sideways over the week until we finally sweep this low here and head a little bit further down for a wave 5 before we either done or we go up for the larger degree wave 4 and take another shot at this level. If we do end up blasting up, that kind of kills that idea. The major death point for that is going to be up at 99K. So if we end up blasting up here, that cuts off some possibilities as to what this count is on the way down. And that would definitely kill this as a nice looking pretty impulse if we end up coming up in here. Wrap this whole up, what I'm watching for is a move into this area and a rejection out of this area for a potential to move down to maybe 75 for the wave 5 to complete this move down here and have it complete nice and pretty. One last caveat is that we don't even have to, we've already entered the block of confluence here. We don't have to go all the way up to this area. It could turn. Backup plan is if we pass this area, we can always plan for another 3C setup. If this finishes as a zigzag, we can always look for that other C3 setup for a move down for a little swift degen, couple $1,000 move. So that's the backup plan if we end up not reaching up into my major area of interest, which is basically this level here. We end up rolling over here. You can always adjust fire and look for another entry, and that's what I'll be doing. So that's my thoughts today on Bitcoin. If you have any questions, concerns, or comments, please leave a comment down below. I appreciate you watching. If you learn anything new or inspiring, definitely throw me some love, subscribe. I'd appreciate it. But that's all I got. Trade safe, trade clarity. Take it easy. Later.